Good morning again. I know it's very early for Tbilisi. We usually don't do anything, especially on Sunday morning, but there's conference that we have to run. So I expect more and more people to come and join us. But before we start with the first panel, a few remarks. So today is the second day of the Web3 International Conference organized by Degamefi. As I said yesterday, this is the biggest conference in the region. And we expect, well, we saw many people yesterday here. It was a blast. You know, so many stories, so many interactions, connections, all of that. So today there are several, it's a relatively shorter day than yesterday. There are several panels, several keynotes, and then there will be startup competition. People will be, founders will be pitching here, and then jury will award some prizes to the winners. All right, so that's some technicalities, and let's start with the first panel. This is probably one of the biggest, one of the most fascinating panels of all them. So it will be about cryptocurrency as an everyday, cryptocurrency's everyday usage, everyday way to pay, and digital payment integration. And so let me move here and I'll announce speakers. First, Marco Dal Lago, head of expansion at Tether at Bitfinex. Come on, guys, we need energy today. So, come on, Marco. Oliver Silvey, head of crypto and digital assets at Mastercard. Please give a round of applause to Oliver. Eralp Hatipoglu, co-founder of CityPay, one of the biggest Georgian startups. Salim Dhanani, CEO and co-founder of Pave Bank. Come on, applause, applause, applause. Anthony Martin, founder of Polygon ID. And moderating the discussion will be Giorgi Gvazava, head of crypto at Bank of Georgia. All right, good luck, guys. Enjoy the panel.
It should start like that. Can you hear me? Okay. So, good morning, everyone. Thanks, George, for presenting us, and thank you to everyone who will be on this panel, and thanks for the attendees who are here. Yeah, it's early in the morning for Tbilisi, not maybe early for other countries, but Sunday morning starts later in Tbilisi. I'm happy to be moderating this great panel, and we have really amazing panelists, and I hope that our discussion will be quite interesting and thought-provoking for most of you. So why don't I start with my first question? We've seen that cryptocurrencies are being adopted all over the world at a high pace, but a lot of naysayers still do not believe it. A lot of naysayers still think that crypto is just a fraud where people make money, or it's just a speculatory investment and either you get lucky or you get bust. So my first question maybe would be to Eralp about what do you think is there more to do in cryptocurrency adoption, and what do you think are their current challenges that kind of blockade or that are the hurdles towards more massive, towards better adoption?
So thank you very much for having us today, and thank you very much for joining. For my point of view, yes, crypto had a bad time in the beginning, and it happens with every new technology, and it's a normal thing. And for now, and the rest of the time of the period of time, we are seeing that crypto and the blockchain actually is solving a problem instead of creating a problem. We are seeing that for the international transactions. We are seeing that when we are visiting another country for the tourists who doesn't want to use a different kind of payment methods, they are just traveling with the cryptocurrency itself. It's a very easier for them. For the mass adoption itself, it will take time. It will take some time. It will not happen in a one day. And first of all, this bad name cleaned itself by the people. And because as a companies or as a big organizations, as a bank, yes, we do have some power at some moment, but at the end of the day, people decides. People decide what they are going to use it, and we need to integrate with them. We cannot say that you need to use this and this is good. They will decide, and they are right now deciding for the mass adoption. We are growing day by day. Of course, regulators, banks, when they are understanding the structure itself and the infrastructure, it's becoming much more easier for us. We were never against the regulations itself. And for us, I'm always saying, if regulation is on the right point, not destroying the company itself, it is for the people for good sake, not to lose their money, not to some scam companies come and steal their money. So it is for them, it is for them to use it. For me, mass adoption will come very soon than we are thinking.
Great, thank you very much, Eralp. And to that note, I would move to Oliver with a maybe similar question. In your opinion, like you are head of crypto at Mastercard, and Mastercard is one of the biggest payment companies in the world. Plus, it's let's say it's not very easy for big companies to integrate with crypto. But I've seen that Mastercard is already doing some steps in this direction. What would you say from your perspective for the company that has been handling payments for long years? And everyone knows the ad, for example, having a girlfriend with that has a dad with a good sense of humor, priceless. For everything else, there is Mastercard. So I would revert to you with a question like, where do you see the challenges, opportunities of using cryptocurrency as a daily payment method?
Good morning, everyone, first of all, and great question, George, and thanks for having us. I would say if we're talking about cryptocurrency as an everyday way to pay for everybody, I think we're quite far away from this, and I agree with some of your comments on this as well. I'll come on to that as part of the challenges, but if we're talking about a solution which allows people to use cryptocurrency as an everyday way to pay, we already have this, right? If we take a crypto card solution, for example, which some of you may be familiar of, but the basic concept is we would partner with an exchange, for example, and if I take myself an example as a user of an exchange that has a crypto card partnered with Mastercard, I can order a crypto card, whether it be virtual, physical, or both, and this enables me to use this in as many acceptance locations, so 100 million plus acceptance locations, as it would my normal debit card with a bank, right? So this solves a major pain point of people that are investing in crypto and want to get this out into fiat currency. Of course, it's possible, but you have lengthy bank transfers and so on and so forth. If I have a crypto card and I have Bitcoin, Ethereum, whatever it may be, sat on the exchange, I can take this card and go to Starbucks or Stamba, maybe a local example, tap that card, and it will debit my $5 for a coffee instantly, and that is treated as a fiat transaction. Now, on the back end, this actually takes away from my Bitcoin or Ethereum, providing that I have the relevant balance in real time, right? Now, of course, there's some settlements that happen in the background, but as a consumer, that experience is seamless and works just like a debit or credit card, okay? So that's one major kind of evolution that's been around for a couple of years now, but we're seeing more adoption of this. Now, why I mentioned why I think we're far away from having this for everybody is where the challenge in lies, right? Because this provides a bridge between cryptocurrency and the fiat world, but as soon as you make that connection, of course, regulation comes into play, right? And the traditional financial system. So the challenge for us, I mean, we can provide this solution to the majority of countries, but we have to look at it on a country-by-country basis. So whilst we can launch this solution in, for example, UAE, Bahrain, South Africa, some places in Europe and US, there are many countries that are not set up for this because each and every country, as you would know, have different laws, have different regulatory frameworks, and to have this card which is, you know, falling into the space of a traditional financial system, you have to have all these things ticked off. So it's something that we are working on. Of course, being the company that we are, we have government teams, public policy teams, we have relationships with most countries, and we're trying to educate them on this subject, but we're a short way along the journey. But we are very much focused on this, and I think the further we get along this path is going to enable everybody to have access to crypto and use it in the real world seamlessly.
Great. Thank you very much, Oliver, for that answer. And now I would move with a similar question to Marco. Marco, you represent Tether and Bitfinex, and Tether, for our audience, probably everyone knows it, but you manage a balance sheet of around 5 times of Georgian annual GDP. Yeah, like Tether as a company manages that amount of money, and there have always been this kind of speculations about the backing of it, and I know Tether has made good moves into transparency. Your quarterly reports support that, but I would say one day, if governments say that stable coins are a threat, then this will be a big, how would say, knife in the back for a stablecoin industry. And what do you think do regulatory bodies and others have? What power do they have, and how can they reach kind of consensus on this when it comes to stable coins and when it comes to using stable coins as a means of payment? It could be just a regular payment, like micropayments, or it could be a better alternative of SWIFT or other legacy systems.
That's really a tough question. Maybe Anthony, do you want to take it? No, you're right. I mean, USDT, especially talking about USDT, because Tether, now is becoming really kind of a big technological company. If you see all the investments that we are doing in different sectors, like in communication, in energy, in education, and so on. But if we talk specifically about USDT, of course, USDT is pegged to the US dollar, and the US dollar is not controlled by ourselves, okay? So there might be, let's say, kind of 2 ways, how even, I don't know, the Fed or any authority could work on whatever, let's say, stable coins or cryptocurrencies. Let's say pulling a nuclear bomb and say like, okay, from tomorrow, no more USDT, no more stable coins, which will make really a bad impact to the whole industry, right? Because basically you would see like collapse of everything probably, and jobs as well, millions of jobs maybe. So we don't think that can happen. But of course there might be more regulation, and regulation doesn't mean that it's bad in general. When also Oliver before, I totally aligned together with him, like we see that most of the startups, most of the companies have to have like a country by country kind of strategy. Also the expansion team of Tether, we have also kind of a geographical strategy as well for these reasons. Also you were touching now payments and mass adoption and so on. In the end, the user, what does it want, the user? What is the desire of the user, right? Is to have an effective transaction means that it takes just a short amount of time to make the transactions without troubles, and it's cheap, right? Stable coins allow that. But there are still like a lot of stages in between, and there are fiat on-off rampings, for example. So what it means is that you send a transaction in stablecoin, but then you have to on-ramp. Maybe you have an app, and then you have to pay a certain fee to the guys that are giving you the on-ramping chance, maybe 1.5%, let's say. Then you have the off-ramping part, right? And there is another 1% or something. Then in between you have the forex, the foreign currency exchange, and there would be like another certain amount of money. So these companies, in the end, the real benefit for the user, in my opinion, would be when you just start from the beginning till the end through a payment in stablecoin. Then you say, and there are solutions working on that directly with the acquirers as well. I mean, you're surely aware about that. Then what happens if USDT doesn't have to be there forever, to be honest. We value other solutions as well. Tether invented some years ago XAUT, Tether Gold, which is basically 1 ounce of gold. So it's a digital kind of asset pegged to the gold, and gold is, let's say, stored in Switzerland, and that can be a means of payment. The means of payment, the medium of exchange that is in between, can be whatever, really, literally, can be whatever. The user doesn't know what's happening in the background, right? Yeah. So, talking about XAUT, and then talking, of course, about Bitcoin eventually. We are seeing some cases, and we are pushing for adoption of that in some parts of the world, where basically you can have a circular economy in Bitcoin. Of course, we are still not there. A Bitcoiner would tell you we need hyper-dollarization of the world before getting towards hyper-Bitcoinization. I don't know if it's good or bad, but it's a little bit what we are seeing now. There is Bitcoin, there are a lot of other cryptocurrencies, other tokens, and so on. There is like a US dollar that is trading most of the commodities, 70% of the commodities around the world, and then you have cedis in Ghana, you have Naira in Nigeria, you have Lari here, you have Turkish Lira, and so on. What we are seeing is that dollar is, let's say, kind of making this kind of hyper-dollarization, at least in some places, towards maybe in the long term, I'm not speaking about the long term, hyper-Bitcoinization. And I stop because I'm talking too much.
No, thank you, Marco. It's always good to hear your thought about the subject, as you are the juggernaut of the industry. So always happy to hear that. And with a similar question, let me rephrase that. Like all the regulation could be good or bad. And I always say that regulation, especially in the finance industry, should be enabling, not restricting. And a regulatory body should try to understand fully the projects and at the same time, with their oversight, with their regulation, not to hinder potential innovation. Salim, so you represent a bank. Probably you have had different types of let's say, negotiations or various knowledge sharing sessions with different regulators. What do you think about regulating crypto industry in general, and also some of the maybe regions where it's done better than somewhere else?
Thank you. So, I always get the regulatory question. So the first thing is regulations can be good or bad, I think, as everyone knows. However, I think that what we've seen in the last 12 months has been incredibly interesting. You've seen a divergence between countries that want to regulate and have regulated, some with good regulations, some with bad regulations, and others that just don't want to regulate at all. Right? I look at the US in terms of what's been happening with Gensler and all the policies that have come in place, and I'm sure that not only people on this panel, but everyone in this room is facing issues with access to dollars. And that is a clear example of the lack of clarity in regulation leading to challenges in business. Right? If we look at Europe with MiCA, or you look at Asia with Hong Kong and Singapore and their evolution of licensing and crypto regimes or digital asset regimes, it's led to flourishing sectors. So, clearly we've seen that good regulation and regulation that has been well thought out has been through negotiation or more in collaboration with private sector can lead to a lot of, one, development of new products and services, and also a lot of investment coming into the space as well. So, and I think just more generally, right, let's just take a step back from why regulation is important. And I think that the maturation of this entire industry over the last almost 10 years has been quite interesting. It started off, very fragmented around the edges. It started off, it kind of moved into quite, I think, products and services that have been replicating real-world financial products or financial systems, but in a more efficient way, like, ICOs and IPOs. Like, tell me the difference. Like, it's pretty much, the same thing in terms of access to capital markets.
Gary Gensler would agree.
Yeah, but we have to look at the nuances of it as well, right? And so now we're seeing institutional capital coming into this market, and regulation will help a lot of this capital come in and therefore innovation come in, right? If we talk about liquidity and we look at the actual depth in the markets globally, we can see massive oscillations between 2021 peak and today. And so if you think, and I think it's clear to most people that if BlackRock gets their approval, as an example, we're going to see a massive amounts of depth in the market and volume and liquidity come in as well, right? So I think two things. Firstly, just to summarize, like regulations are playing a huge impact on on innovation in the digital asset industry. As we see the maturation of this regulation, we are going to see some really, I think the almost convergence of traditional finance and also blockchain and digital assets coming into the financial sector. So some of the really interesting things that were mentioned by the by other panelists, like in terms of the challenges facing with the on-ramping and off-ramping and the costs, all of these things are going to fizzle away slowly but surely as we see more mature regulation.
Great. Thank you very much for that answer. I do believe that there are, certain things that blockchain can do much better than the traditional systems, but there are certain things that, sticking in blockchain is not very effective, efficient, or anyway. And we've seen lots of projects that just, use blockchain in the case like for the sake of using blockchain, not because it makes sense in some cases. And that kind of creates a, let's say, negative attitude sometimes. Having said that, I would probably now move to Anthony about the security. Every day, sometimes every week, we hear some kind of hacks. We hear people losing money, we hear all the bridges being exploited, we hear some centralized platforms getting hacked. And this kind of hinders mass adoption as well, because from a person who is not in this industry, does not really understand. For example, I had to explain to some people that Bitcoin did not get hacked, or any blockchain itself didn't get hacked. It was the platforms, for example, FTX, or for example, Ronin network, like breach, that got hacked. And this sense of not being secured hinders adoption. So what are the, I would say, what are the new ways to secure new platforms, and also how do we help in, let's say, attacking back the social engineering attacks that are happening and that have been the culprit in most of the recent hacks as well. So security aspect of having blockchain, of having cryptocurrencies used as a everyday payment tool.
Yes. Well, I think that there are three features regarding this point. One is that FTX was not a blockchain at all. I mean, they were a platform dealing with cryptos, but for me, I cannot consider, or Luna is another example, no? Something that is giving you a 20% yield, that you see that that's a Ponzi scheme, no? That's one thing. The second thing is that when we speak about blockchain is decentralization. And then with that, what we see is that the two honeypots that are the Bitcoin blockchain, the Ethereum blockchain, that we know that they have received hundreds of attacks in the last years because you can earn billions. Nobody has been able to hack them. No? This means that when you apply the cryptography and the decentralization in a proper way, there is nothing that can be more protected than this. And I know that because I have been working 17 years at the financial sector, and I knew that every month we had a hack, because if you have single servers, it's easy. The good thing is that also, as these servers are controlled by you, then you can fix it during the day. No? But we know that financial institutions are being hacked, and this is a problem that they have. Also, as you were saying, maybe the use of blockchain, we should analyze if it's required or not, because if maybe you only need a database, blockchain doesn't make sense at all, okay? And then the third thing, and the third vector attack could be the breach, okay? And this is sadly what, for example, happened to Solana recently. I can say other names, but it's not against them, that it's something that is hurting the industry, no? And here, the problem is that when you upload an asset, you need to change it from what we name a native asset, or the asset that is original, to a synthetic asset in order that it can be traded in that platform, no? In that technology. Well, thanks to ZK, for example, the ZK proof technology, we are fixing that. And this means that the native asset should be able to be uploaded in the platform. With this, you are avoiding the duplicity. And what is better is that you will have a common aggregation layer between all the blockchains, and this will make it impossible to hack these synthetic assets. Okay, then with these three factors, I think that we are addressing the problem, and I feel very confident about the future. Obviously, all of us, we have the risk to be hacked, and for any platform, also for Polygon, of course, this is our main danger, no? When people tells me why Polygon can die, I say always because we are hacked. I mean, we are very aware about that. But well, we have also, we trust the technology. As I said, it is decentralization, the fact that we are open source. Also, I should say that a lot of white hackers, when they see a problem, they write us. The community is very open to fix these problems. And yes, I think we have a soundness technology for the future.
Great. Thank you very much. And maybe, Oliver, you could also shed some light on security stuff from your perspective.
Sure. I think I'll take a slightly different angle on it. I think you covered the hacking aspect very well. And I think ultimately, whilst we're progressing in this space, there's always this risk, right? And not just in the crypto space, in the traditional financial space as well. All we can do is work best to try and eliminate this as much as possible. But for me and at Mastercard, I think security and trust is absolutely vital if we look at mass adoption of crypto, right? There are many tools available today that can help with this. If we look at the crypto population today, right, I'm sure many of you are native crypto users. There is a large population of these people that have always used crypto since it was available and will continue to do so, and they are confident to make the decisions of where to buy crypto, how to use crypto. However, the much larger population is what I call the crypto-curious people, right? Most people these days have at least heard of crypto, but actually making the decision of where to buy that crypto, what to do. I mean, I get questions all the time, I'm sure everyone else does. It's a scary place to be, right? Over the last 18 months, there's been a lot of negative media, things like the FTX collapse, which was mentioned earlier. If I was a new user to crypto and I wanted to get into it, I'd be very scared, right? Which exchange do I use? Do I use centralized? Do I use decentralized? How do I get my money out? How is it protected? All these kind of things would probably move me away from getting involved in crypto, right? Some of the tools today, though, which are very good, do help with some of these decisions. So it's a key focus for us at Mastercard. We've actually made several acquisitions over the last 2 years, specifically on blockchain security tools. So one is at CipherTrace, one is Ekata, which we've made full acquisitions of. Now, there's quite a few others available in the market, and we encourage exchanges and banks, et cetera, to use several to make the best decisions. These fall into the space of blockchain analytics, fraud, and identity verification, right? So when an exchange uses tools of these types, what they're doing is making sure they're onboarding the right type of users and trying to weed out the bad actors. And then second to that, once these users are onboarded, these tools can automatically monitor what category of transactions are taking place on these exchanges, right? With the view to making sure there is very minimal, or ideally 0% of bad transactions, like terrorist financing or moving money into mixing accounts, moving money for money laundering purposes and so forth. Because being involved in these type of transactions, as we've seen with some exchanges, can lead to the eventual shutdown of these exchanges. So as a user choosing an exchange, I personally would want to go with an exchange that has these type of protections in place. Whilst it may lead to a slower growth of a user base, it's going to lead to the longevity of that exchange, right? Because the last thing you want to do is onboard quickly somewhere because it's easy, buy crypto easily, and then suddenly the exchange gets shut down, as we've seen in the past. On the flip side, whilst that might seem negative for an exchange to have a slower growth rate because of all these protections in place, it does offer an opportunity for newer exchanges, because if you're looking at longevity in this industry, it's better to set up in the right way and grow slower, but be there for a long time. So these type of tools can ensure they're only onboarding the right type of users that are making legitimate transactions. And then I think lastly, from the bank side of things, so they can also use these tools when they're looking to be involved in crypto at some stage in the future. So if I am Salim or George, and I'm using one of these tools, and with a potential view to partnering with an exchange, I can sit there in the bank and actually type in Binance or Crypto.com with one of these tools, and it will give me a full verifiable report on that exchange to tell me things like where they're incorporated. It will give me an AML score, tell me what kind of tools they're using. It will give me a KYC score, and it will also give me an overview of their inflows and outflows to say what percentage of these transactions are being used for illicit transactions, right? So I can make that decision as a bank that I'm only going to be partnering with the legitimate exchange, because the last thing you want is a partnership that's going to fail due to a bad actor. So I think whilst it may lead to slower progression, it's going to lead to longevity in this industry, and I think that's absolutely key.
Thank you very much, Oliver, for that detailed answer, and it really shed some light on different tools, and I didn't know some of the things that you said, so I will look into Mastercard's different series. Yeah, we can talk after. Actually, when I was at Deloitte, there was a training about how you should always have a questioning mind when you deal with clients. You know that the concept of questioning mind is that. Yeah, you can, listen to your clients, trust them, but still, question, be skeptical, and so on. And there are, I think, two things that I would say about which applies perfectly to crypto and blockchain space. One is, which is something Anthony also mentioned probably, is if you do not understand where the yield is coming from, you are the yield. So that would be the kind of first warning. So if something is like offering you 20% or 25%, you should ask where is the yield coming from. If you do not answer the question, if you cannot answer that question, that probably means that you are someone's exit liquidity, let's say. And another one is, which also kind of connects to, is linked to the first one, is if something sounds too good to be true, it probably is. And that's for people in the audience who are maybe new or not very experienced in crypto-related stuff. Always having a question in mind and answering these two basic questions would help you decide whether to go, and obviously always do your own research. Now, that brings me, as I see the time, that brings me to my last question, where I want probably answers from Marco and Eralp on this. Maybe Marco, we could start from you about what are the real-world use cases of cryptocurrencies used as a payment tool, or in other let's say, beneficial ways. I know that there have been a big activity around Tether in South America, if I'm not mistaken. So why don't you just share some real-world examples where Tether is? I know Tether is present in a lot of places, but where there are some specific stuff that's happening that helps some communities, some countries to deal with, let's say, high inflation maybe of their local currencies, or not a very well functional financial system, and so on. Like, where does Tether in this case and blockchain add the most value in real life?
Yes, I actually don't want to. Yesterday I gave some examples. I don't want to repeat too much, but
I was not here yesterday. Sorry.
Exactly. So I can. Sorry, just close your ears. I think let's say the trade finance industry is going to be quite huge. And yesterday I was speaking about. I will be really brief, but yesterday I was speaking about, for example, this company from Taiwan called XREX that is doing an escrow system, and basically is transacting big volumes between buyers and sellers and suppliers for manufacturing industry, for example. It's not that easy to send a wire transfer between Ghana and Georgia, for example, right? And it's even more difficult to do it from Taiwan to Argentina. So that's where USDT is used. Still, we have the same kind of issue that if you don't have like good integration with the on-off ramping, let's say, and the payment rails, then you have a problem. So you need to cooperate with a bank, of course, and the kind of due diligence eventually is the same. You know, it's just to get the transfer faster and the liquidity in a easier manner, let's say. So this is more, let's say, on a larger scale. I believe that in the next 2, 3, 4 years, we are going to see huge companies working in the trade finance industry, talking about Foxconn, talking about Pegatron, these kind of companies, chip manufacturers, for example. That's one. The other one, we have really tons of use cases. That's my, let's say, kind of my job to work together with company like CityPay to boost small retail transactions. If you look at whatever report right now, like, I don't know, Chainalysis report, you will see that the transactions below $1,000 are still, let's say, 4 to 5% probably, something like that. The big transactions are the ones that are making like the big volumes. And I'm working every day to try to create, to foster real use cases. In Buenos Aires, the main, let's say, food market, where, that people from restaurants go and buy fish and so on, basically has cash volumes of 4 million USD per day. Is one of the biggest supermarkets in LATAM, and then there are transactions of wire transfers, of course, and so on. So now you can go and pay in Tether there. There are basically QR codes all around, or you can just have an invoice. And we did it together with a company, which is called a Crypto Market, that provides a wallet, a payment system, and so on. And we did the same in Bariloche, still in Argentina. A lot of Brazilians, they go there for skiing. And basically, in Brazil, there is this payment method, which is called Pix. And we integrated USDT with Pix through a company called SmartPay. And basically, the Brazilians don't have to exchange their currency. They just pay USDT. They go there. And they can also save in USDT. And I was telling yesterday, everywhere around the world, people are using USDT to store value. To be honest, the proof that Tether is relevant is even the fact that when I came to Georgia the first time, I saw Tether logos all around it. That was the first of Tether coming here, right? So I'm taking the credits of what has been done spontaneously.
Cash to Tether, Tether to cash. And city of Lugano, Marco, you haven't mentioned that. In the city of Lugano, you can do anything with Bitcoin or Tether, right?
Of course. Thanks to Polygon as well. In Lugano, we spent, let's say, huge efforts with another crypto, let's say, service, crypto payment provider. We integrated Bitcoin on Lightning and Tether on Polygon. And then in Lugano, you have also Luga token, which is a token that provides cash back. It's pegged to the Swiss franc, actually. The municipality developed it on their private blockchain. And it's a lot of education, right? Lugano is a small city, but it's the third financial district of Switzerland, because Italy, Milan is close to it, right, as well. And we have around 400 merchants in the city center where you can pay from a pizza to a car to a watch, whatever you want, in Bitcoin and Tether. And to be honest, the volumes are quite big to be in a small city like Lugano. We are working on education mostly. Every week we have like educational materials on the free copy of newspapers online. We are working together with merchants. Yes.
Great.
And let me also make some advertisement. Also, we have the conference 21st of October where you will come, and also I invited all Georgia to come. So if you guys don't have anything to do, come to Lugano. And
Eralp, maybe you summarize the last question.
Thank you very much. Marco said everything, basically, about the payments, about the industry. What I would like to add is in the beginning of the mass adoption, if you are a crypto holder in here, if you are willing to hold the crypto, please understand the Satoshi's idea. Please understand the decentralization idea. Do not be afraid. Anonymity doesn't mean always bad. And most important thing is that if it's not your keys, it's not your money. it needs to be your money at the end of the day. Because of cryptocurrency, what it solves that your money, you hold your money. You decide where to spend, what to do with it, and where to send it. Right now, we are seeing that settlement problems, payment problems, regional-wise, everything. We are here just to fix this problem, nothing more. And at the last, please, 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 do not go far away from the decentralization idea. Thank you.
Great. Thank you very much. And then on that high note, maybe we summarize, and I thank all the speakers for their great insights and all the audience members who have dared to stay with us for the whole 40 minutes. I hope it was interesting. Maybe we still have one minute and 30 seconds. So if there is any questions in the audience, I would be happy to either answer myself, if I'm not afraid, or let our speakers, if there are any questions, obviously. Okay, we have a speaker. Oh, Zurab, is that you? Maybe. Okay.
Look, I just noticed that here in Georgia, Tether is mainly on the Tron blockchain. Is there any reason for that?
Cost.
No, actually, there is a reason why Anthony's here. Because actually, the Tron network became spontaneously, I would say, kind of the main, let's say, payment layer lately after Ethereum because of the gas fees, right? So gas fees were quite high on Ethereum, so you cannot spend and buy a sandwich and then pay $3 of gas fee, right? So people moved on to Tron. Maybe Polygon for this specific use case was not that, let's say, renowned in that specific moment. But in reality, now if you pay on Polygon instead of Tron, the fees are lower. That's, I think, Polygon, but that's more on Anthony's side, is making a big effort now to, let's say, make people, merchants aware that actually there is another payment layer, which is Polygon, that is much more cost effective. I don't know if you want to add something. Or, yeah.
No, well, I think you defined perfectly. I think Tron, but as I said, it's more centralized, it was more cheap. Also, the technology has evolved. We had POS 2 years ago, now we have the ZK rollups, the supernets, which make us more efficient. And now we think that we have an opportunity in terms of decentralization, security, and cost to be more efficient than other platforms.
So Polygon basically solves the Vitalik's trilemma. Is that what you say? Great. Thank you very much again. Let's have a round of applause to our speakers.